Welcome back to the Retire Young podcast. Don't forget to subscribe to the Retire Young podcast on Apple Podcasts, iHeartRadio, and Spotify. If you're just tuning in, Al was shedding some light on cash flow. Now, that's cash flow during your working years or cash flow during retirement, how you can utilize small amounts of your retirement accounts to generate extra cash flow, utilizing these futures markets, the Forex market, also the options market. And one of the things that you wanted to get into on this segment, Al, you wanted to continue that discussion on retirement, but why most people are relying on what they didn't intend on relying on in retirement. I got that out pretty good, didn't I?
I think so. Can you repeat that 10 times?
No, let's let you do that.
Okay. All right. Yeah, what we're talking about, obviously, is what you are relying on in retirement is the company-sponsored retirement plans you have. That's the case for most of you. It's a 401k, a 403b, a TSP. And I think we've gone from a period where companies provided pension plans for people where you got kind of a guaranteed income on a yearly basis. And if the pension fund, if the amount in there dropped down, the company was responsible for putting more money into it. Somebody was responsible for controlling that, for managing it. But now with 401ks, 403bs back in the early 80s when those came into existence, the responsibility was turned over to you. Mm-hmm. And so you really became your own pension fund manager.
Without the education.
Without the education, and in many cases, probably most cases, without help or advice. So you're making the choices within that fund. And that's what I was saying earlier in that last segment. It's ironic that the one thing that is probably the most important thing to you financially when you retire is something that you know very little about. In 401ks, there was an article in Forbes recently that talked about 401ks and what the real situation is. And the Economic Policy Institute was quoted just saying that 401ks were never intended to replace pensions. The Center for Retirement Research, 401ks were never designed as the nation's primary retirement system. Even the gentleman who really is kind of credited with developing the 401ks, Ted Bina, in a Wall Street Journal article, he even said these things. Many of the early backers of the 401k says it wasn't designed to be a primary retirement tool, and he acknowledged that they used forecasts that were too optimistic to sell the plan in its early days. He said, this is Ted Bina, others say the proliferation of 401k plans has exposed workers to big drops in the stock market and high fees from Wall Street money managers. No, the reason I'm saying this, I'm not saying don't put money into your 401k. What I'm saying is learn what's in your 401k. You have to be responsible for it. Learn how to manage it. There are choices in your 401k that may be better than other choices. How do you identify which those are? That's part of what we teach our students. It's what we call dynamic 401k management. Maybe some of the fees in one investment choice you have are higher or too high. And then also, this is what a lot of our students do. They will put money into a 401k up until the point that it's matched by your employer. And that's probably the biggest advantage of these accounts. That's free money. Take advantage of that. But then most of our students, or many of them, will set up a self-directed IRA where now you have the choices. You choose many more you have the opportunity to make many more choices, I should say, than you do in your 401k. You can have assets in there that will go up when the market goes down, which is not available to you in your 401k. One of the biggest advantages is that you eliminate fees. Those fees can have a big hit on what you could end up with in retirement. Maybe 30-40% of what you could have is gone because of those fees and the opportunity. Every dollar that's taken away from you in a fee is a dollar that may not be providing maybe thousands of dollars or hundreds of dollars in the future for you.
Well, and here's the thing, too. What is that common phrase that a lot of people say when they just don't know what they're doing, but they just go ahead and do it? I'm going to wing it. And should you be winging your retirement plans? I mean, I talk to a lot of people, and a lot of people, before they start learning the skills and get the education, they say, "Well, I get some funds I can choose. I pick what sounds good, and I hope it goes up." And I just that's what they do. Well, don't wing your future. Now is the time to take action to that. I mean, learn what is in your 401k, as Al said. So, in how you do that is you have to get that education. First off, it's taking action. going to get the education, learning the skills of trading and investing, no matter what you're looking to do. And then hopefully you live the life that you choose to live, not what somebody else or a stranger is putting you in to hopefully get you there. Al, you mentioned one thing that I don't think our listeners understood, or I don't think you got into it deep enough. I'd like to have you talk about a little bit. Self-directing.
Correct.
Because that is, you can take matters in your own hands. You can protect your retirement accounts. You can take advantage of down markets in your retirement accounts. It's not rocket science. You just haven't been taught yet. Explain what self-directing is. I know it's exactly what it says, self-directing.
Correct.
But explain what the opportunities people have, especially in the turmoil that we're having in the markets.
Right. Well, as I've said before in numerous broadcasts, Josh, you're actually making decisions right now for yourself in your retirement accounts. So you're really already self-directing your 401ks, but then you're paying fees to somebody to allow you to make your own decision.
They're winging it.
Yeah, that's correct. They're winging it. You don't want to do that. But in a self-directed retirement account, you have many more choices. As Josh mentioned, you can put things in there. You can have assets that will go up in value as the market goes down. What do you have in your 401k now that can do that? You probably don't have anything. And remember, mutual fund managers, if that's what you have access to, they can't short the market. They can't go to all cash. So there's some disadvantages there. Again, we'll help you better manage your 401ks, but as soon as you can, maybe you want to put some money in a self-directed IRA. And if you can set up a Roth IRA, that's great too, because everything comes out tax-free. But when you have the choices, you can go to all cash if you want to, if you just want to sit out a market movement like we're having right now. But know that there are opportunities to make money in these down markets, and you can do that. You cannot short in an IRA. Shorting is a way that a lot of people make money in a down market where actually you're selling something you don't own. You're borrowing it, you're selling it at a high price with the intention of buying it back at a lower price and returning it. So the difference between what you sold it for and what you buy it back for, that's your profit. Well, a lot of people, the big institutions do that, and they're doing that now during these down markets. You can't do it in an IRA, but there are other assets that you can use that give you the same result. An inverse ETF, that's an exchange-traded fund that goes the opposite direction of the underlying. There are certain options you can use to make money in the down market. You can sell futures. There are ways to do this to take advantage of these directions that the market is taking. If you're counting on the things that Wall Street has told you need to do, which is look at the fundamentals, think about this. When we see these huge swings, daily swings, could be hundreds or thousands of points.
Big moves.
Fundamentals didn't change every time there was a change in the movement of an asset or the markets. It's just buyers and sellers came in to create that movement, and that's what you want to identify.
It's just supply and demand. It's where the banks are buying the big money and where the banks or the big money is selling. Now, a lot of you, I know you have retirement accounts, 401ks, IRAs, 403bs, and if you're feeling a little bit nervous about what's happening in the market, which, it's normal. There's a lot of emotions in this market. And, what a lot of brokers and advisors are telling you right now, don't make emotional decisions, which is basically what they're telling you, don't do anything. Now, that makes me nervous because you're not taking action. And self-directing is how you can protect your portfolio on your terms. I mean, how long do you want to wait? I mean, we're seeing a huge opportunity right now. Now is the time. And we talked about at the beginning of the show, this is probably one of the most important shows that we're doing, Al, because we're raising awareness to financial illiteracy. Thanks for listening to the podcast. Don't forget to check out our website at retireyoungaudio.com.